Hello, I'm Peter Herbert. Welcome to the latest in our series of short CPD webinars looking at topical accounting and auditing related issues. In the 3 years or so we've been running these sessions, we've not focused massively regularly on ethics. So we thought that would be quite a good topic for this month's session. And what we'll do in our short session is talk a little bit about why ethics is important, particularly at the current time, and then think about a couple of scenarios, one related to an issue that accountants could face in professional practice generally, and thinking about the requirements there of the ICW Code of Ethics, and then a second scenario looking at the specific requirements of the FRC ethical standard as it applies to auditors. Let's begin with some basics though and think about what ethics is. I think a dictionary definition will often focus on the importance of principles, values, beliefs, doing the right thing. Something people often to me say on courses what ethics is all about, and that I think very much is where I would be with it. I wonder whether it's also perhaps sometimes ethics about perhaps going a little bit further than what the rules formally require. I remember talking to a partner in a firm years ago on an ethics session for auditors, and she made the point that if you're ever, as an auditor, scrabbling around in the FRC's ethical standard to find justification for what you're doing, you probably shouldn't be doing it. So sometimes doing a little bit more than the rules require, just to make sure you're very much doing and being seen to do the right thing in terms of the way you conduct yourself day to day. When we ask why is it important for accountants, people often say that it's important to adhere to ethical codes because if you don't do, then you might end up getting fined. That I think is absolutely true. I guess to me though, it's also a bit more than that in terms of, to me, it's very much about reputation. So if you're doing the right thing from an ethics point of view, it's going to help your personal reputation, reputation of your firm, reputation of your professional body, and of course, reputation of the profession more generally. And why particularly important for auditors? I think from an audit point of view, it's all about, isn't it, sort of being seen to be objective and independent in what we do. I think some not working within the audit profession do struggle somewhat with auditors doing lots of stuff for their clients not related to audit, providing lots of additional non-audit services. And whilst I guess the FRC ethical standard applies to a range of different considerations, to me a really key one is making sure that in terms of what you're doing for clients beyond the scope of audit, that is in no way, shape or form impairing the objectivity you got in relation to the audit that you're carrying out. Talking in the intro about the importance of ethics right now, I know a lot of you who are chartered accountants will be aware that the Institute's CPD requirements are going to change from November this year. We're going to move towards back towards a regime where a minimum number of CPD hours is required. So that's going to very much be to the fore in terms of the sort of way in which CPD requirements will be structured. But within that, there's going to specifically be an element that must relate to ethics. And I think certainly from my side as a trainer, we're getting more demand for ethics right now, probably with that in mind, that with effect from November of this year, ethics training will become imperative as part of the CPD requirements for chartered accountants more generally. Okay, so as I said, we're going to start off by looking at ethics as it applies to accountants in professional practice more generally. You'll see on this slide, we've got the Institute's Code of Ethics. They talk, I suppose, about a step-by-step approach to dealing with ethical issues. So identifying threats to independence and other ethical concepts, ethical principles, evaluating the threats, and then thinking about putting safeguards in place to eliminate the threats or reducing them to an acceptable level. And to my mind, that's very much the same way you would approach it specifically in the context of threats to independence in relation to audit that you might be involved in. I've added a fourth one, which is document your approach and conclusions. I guess if there ever were a situation where perhaps your firm were in some way, shape or form conflicted or facing some sort of ethical threat, if you've documented your thought process, then if that were ever called into question, it's all laid out in black and white, what you've done and what your approach actually is and the conclusion that you've reached. The other thing I think was quite interesting in terms of comparing perhaps the Institute Code of Ethics to the FRC ethical standard for auditors is it does actually talk in the same way that the FRC standard does about the importance of applying the reasonable and informed third party test. So yeah, I guess it's sort of saying, isn't it, that it's very much about you doing what you think would be appropriate in terms of a safeguard to manage or mitigate an independence threat, but what would the man or woman on the street think in relation to that threat and how you would mitigate it. Taking a step back, I suppose, therefore, and that links back to my earlier point about perhaps doing a little bit more than the rules might require in some situations, to be seen to be acting in a totally ethical way. Now, I could pick any number of examples. I've gone for this one. You just had a successful meeting with a local bank manager that provides invoice discount financing. She happens to be a good friend of yours. The bank's agreed to pay a commission to your firm whenever a client's introduced. Is this okay? And if so, what are the important steps that your firm should take? Well, this is an area where the Institute Code of Ethics provides specific detail and guidance, which I think is quite helpful. I think the rules in this area have certainly ramped up a bit in recent years. And what they say actually is that in the context of that particular situation, you would need explicit written consent. And that could be consent in your letter of engagement, provided more generally, or it could be advanced specific consent in the context of an individual payment being received by the firm from the bank in this situation. Now, I think lots of firms will refer to this in letters of engagement because I guess it gives you sort of blanket coverage. What you do have to do these days, though, in the letter of engagement is to be explicit as to what a fair indication of the amount that you might receive would be. And if you receive more than that amount as referred to in the letter of engagement, you would then be required to communicate with the client, articulate the amount that had been received, and therefore go a bit further, I suppose, than what the letter of engagement would actually include in terms of detail. I think from the point of view of the Institute, certainly from a practice assurance point of view, this does seem to be very much on their radar currently, the rules having ramped up in the last few years in this area in relation to that transparency about the amounts you might possibly receive. Documentation, obviously very important, as I've already alluded to. I guess the way I frame the example, though, is that this particular individual who works for the bank happens to be a good friend of yours. So I guess in the situation here, there might be a perception that you are possibly somewhat conflicted. And again, I think having sort of looked at these sort of area quite a bit in recent years, I do think there's a big imperative here to make sure that if you are actually introducing clients to third parties like banks, like independent financial advisors, that they are genuinely people that are going to give your client a good outcome, and that you are therefore, I suppose, doing appropriate due diligence to make sure that in introducing them to that particular organization, you're getting the best outcome for the client. I mean, that may well be the case here. The challenge here, I suppose, would be, are you doing the introduction simply because this particular individual is your friend, or are you doing it because actually it does give the client the best outcome in the circumstance? That's a very important consideration, I think, here in the scenario as described. I think with all this stuff, always very important to make sure that everyone in your firm's on board. So I think with these sort of ethical conundrum, ethical scenarios, some people completely get it. Some people might be a little bit more off the radar as far as this sort of mindset's concerned. I guess, again, a key tip, I suppose, for me, in terms of the way that the firms are run day to day, is get everyone on board in terms of the right thought process and the right disciplines as well, I suppose, around documentation. We do quite often get asked the question, would the rules apply in the same way if you were making such payments in order for your firm to get introduced to clients by other third parties? Not quite as onerous, the rules, I think, in that particular situation. We got a question the other week, actually, from the firm about what would be the case whereby maybe they'd picked up the chance to tender for an audit as a result of an introduction from a third party to a client. They were going to have to then pay, I think, in the first year that they were doing the audit, a portion of the audit fee to the organization that introduced them. I think our top tip in that situation was be very explicit as to the amount you've received resulting from that introduction, but the actual explicit rules around R330 very much based on situations where you introduce clients to other third parties as opposed to third parties introducing clients to you. But I think transparency and clarity is always the key watchword as far as these situations are concerned. Okay, so that's a little bit of a think about a specific scenario in relation to, I suppose, the sort of things that accountants might be looking at and facing generally day to day in their professional work. Let's think then, if we could, as part of the final section of our short session together, about the FRC ethical standard as it applies to auditors. Yeah, I was talking to someone in the Institute's QAD team actually a week or so ago about what sort of ethical issues are very much on their radar currently, and what issues perhaps do they feel arise in terms of perhaps firms not completely embracing the ethical standard. And one of the points that came back was just really needing to reinforce to firms in the context of audit ethics exactly what we mean by a covered person. So a quick recap on what a covered person is, and then one or two examples to follow. So what the ethical standard fundamentally says for auditors is that for each audit engagement, the firm and each covered person must ensure that they are free from conditions and relationships that will make it probable that an objective, reasonable and informed third party would conclude that independence was in some way, shape or form compromised. So there we are. There's that objective, reasonable and informed third party again. And therefore there again is the need to sort of step back and think about things from an external perspective rather than get too focused on what we think is right. Yeah, and each audit engagement, the firm and each covered person, I certainly would say that in smaller firms, as a rule of thumb, if you think that all partners or directors in a smaller firm, certainly any single office firm, are covered persons on all audits, you're probably going to be on the right track. And what I think therefore is quite burdensome here and quite challenging here, this very much does, I think, bring non-audit partners into scope as far as the ethical standard is concerned. So if they're engaging with audit clients in any way, shape or form, if they're providing services to that audit client, even though they're not actually involved in audit, it can still be a problem. So I think the key thing for me when it comes to audit ethics is spread the word, and in any firm, get non-audit folk on board, as well as getting audit folk on board, and embracing what the ethical standard genuinely does require. And that extends to persons closely associated with those key individuals in certain situations. So spouses, partners, dependent children, relatives who have lived in the same household for more than 12 months. Yeah, and companies or trusts where anyone above, if as it were, is involved and has managerial responsibility or has a substantial equivalent economic interest. So again, very broad, I suppose, who exactly is deemed to be a covered person. And as I was saying on a session only earlier this week, the really important imperative, I think, therefore, for all firms is making sure that all staff do flag up on a regular basis where they or their nearest or dearest have any association with audit clients, and that will then mean appropriate steps can be taken, which in some cases might be, when it's certainly a very senior individual that's got that connection, the audit firm might need to withdraw and someone else might need to do the audit. Right, two situations we're going to look at, and again, I could pick any number of them. I'm going to look at two related to client employment. So here we go. First one, the spouse of your firm's managing partner is the financial controller of an audit client. The managing partner has no involvement in the audit. Well, that's a great example, isn't it? I suppose if you think that in many firms that we work with, all partners will be deemed to be covered persons on all audits. Spouses are also in scope. So yeah, I guess what we're saying therefore is a covered person cannot have a sort of an employment role or an employee role, as it were, within a client organization, and certainly where that involves being the financial control. We come across that a couple of times over the years, and I suppose what the firm tried to say in its defense there has been, well, the individual concerned, the managing partner, was in no way, shape or form involved in the audit. Well, they're still a covered person, and that still is very much off bounds as far as audit firms are concerned. And that one hopefully would be pretty obvious and pretty clear and straightforward. This is one I came across a few years ago. You may remember we were covering it a little bit on audit courses a few years ago. It's quite an interesting one, isn't it, this one? The brother of one of your firm's tax partners is the chairman of a championship football club which your firm audits. And I guess I suppose with this one, we're saying, well, okay, all partners are perhaps construed as being covered persons on all audits. So I think if the tax partner got the association here, that would be problematical. Brothers, well, yeah, brothers are only going to actually be covered persons where they are perhaps in a place whereby they've lived in the same household as the, in this case, tax partner for more than 12 months. In this particular instance, that absolutely wasn't the case. And so technically, you'd say this particular individual was not a covered person at all. And if they are acting in a role where they're non-exec chairman of the Championship Football Club, one would imagine they're going to be reasonably removed from the day-to-day finance decisions that might in some way, shape or form impact on the actual look and feel of the accounts. That being said, when this case was in the press, a few years ago now, I think many took a fairly dim view here. The press certainly did. And I guess when it comes to these other ethical conundrums and these associations that people might have with audit clients, it's also, I think, very important to think about what exactly the audit client is. And I guess Championship football clubs are very much going to be in the public eye, very much subject to scrutiny, perhaps in a way that an owner-managed business might not be. And for that reason as well, just doing that a little bit more, might be the way to go. I'm not saying this is completely prohibited, but it's a good example of perhaps going a little bit further than the rules formally are requiring you to do, just to sort of be and be seen to be totally objective. It's not a fantastic look if someone on the board of the club, their brother effectively is a partner in the firm doing the audit. Clearly, in reality, there's going to be no direct link there, but it's just the look, I suppose. And with that being very much a public eye sort of organization, that was, I think, integral in that case all those years ago. Okay, so there we are. That's a few thoughts. And as you can see, lots to it in terms of, I suppose, ethics in relation to the role of accountants generally, in terms of the relationship with their clients, lots there in relation to audit ethics specifically. And from an audit ethics point of view, one thing I would also just mention is if you do find yourself breaching the ethical standard, you may remember we've been covering this, haven't we, on the audit updates this last couple of years. What you're now required to do is make a 6-monthly report to your professional body. So very much an important area, I think, generally, just to make sure that you are making sure you're aware of the key imperatives and staying on the right side of the line, and not so, I suppose, putting you in a place whereby you're subject to criticism, perhaps from the professional body in relation to what you do. Okay, I hope that was useful. We're going to do a longer session actually on our Spring 23 public program. There's still a few spaces left on that. So if you want to book on and do some more in-depth stuff on ethics for accountants and auditors, do join me on the 6th of March for that particular session. Any other queries about today's session, do drop us a note, inquiries@insight-training.co.uk. But I hope that was useful. Good chatting to you, and look forward to speaking to you again soon. Thank you and goodbye.